Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh, and for the markets, we're pretty much at the low point of the day. It is definitely a down day, 140 points lower on the Nifty. So 0.8% gone there. But you know, the rest of the Asian markets, like we've been talking about, are also at the low point. So something like a Hong Kong market is again seeing cuts of around 1.5%. So that's what's happening across the world as well. The mid-cap index is faring a little bit better, but it's still a 0.4% cut that we're seeing over there. The Nifty Bank has come under severe pressure, so 350 points gone over there. And in addition to the banks, it is a lot of the IT names, the large-cap IT names, which are definitely seeing some cuts. We have a lot of queries to, get through today. So let me invite our guests on the show. We have Rajat Bose joining us on the technicals, and we also have Parthiv Shah to take us through the fundamental perspective on all of these stocks. So Parthiv, Rajat, thanks a lot for taking out the time as always. Rajat, before we start, if I can just come to you, on the markets itself, we're pretty much at the low point of the day. We have been seeing, some kind of resistance at these higher levels. How do you think it's likely to proceed from here? Of course, there is also that global factor which is playing out right now.
Well, going by purely technical data, what I can see is that 9-day exponential moving average, which was for the Bank Nifty, it was at 43,551, and it is now hovering around that. And regarding the Nifty, a similar situation has built up, that the 9-day exponential moving average, though it has been broken, but there is a strong support area around, say, 18,125 or so. Unless that is decisively taken out, you don't have much to worry. But the problem is that the 20-day moving average, which is around 18,050, if that gets taken out, then that would be the first major danger signal. But I would say that similar kind of fall we saw a few weeks back from the high of 17,863, and that was 17th of April, and that correction continued for 5 days, and after that the index moved up again. So it is definitely disconcerting, the kind of fall that we have seen yesterday as well as today. But so long as the moving averages are holding, I wouldn't be unduly worried, but definitely it could be the beginning of another correction, which may last from 3 to 5 trading sessions. Beyond that, we would need to consider that things are actually getting more murky.
Okay, got that. That is a quick call on what's going on with the markets right now. But let's get to our queries as well. We have Vinod Kumar, who writes to us from Kerala. He holds 1,500 shares of IRCTC, which he bought at 658. He says he's a long-term investor and he wants to know whether he should hold or sell. So he definitely got in at a higher price over there. He is seeing a loss right now as well. Parthiv, comment on what you think about IRCTC. I know a lot of the railway stocks have been, railway-related stocks have been rallying. IRCTC, not so much. What do you think about this one? And is there anything else within this basket that you think is perhaps better positioned?
Good afternoon, Pavitra. See, yes, absolutely. I think all the railway stocks have been buzzing. And in case of IRCTC, we know for the fact that ever since the IPO, it had a stellar listing, post which I think it has really given fantastic returns to shareholders, which is very rare from a PSU IPO listing. But no doubt the business model is fantastic. They're earning a lot of transactional income because it's basically the centralized payment gateway for any sort of railway ticketing booking, and the e-ticketing booking, the transactional value is pretty high. That's one of the highest gross margin business for them. Even the catering business and the mineral water business is also a reasonably good business. And post-COVID, we have seen a massive influx in terms of the usage of the railways. And what our sense is that Tejas trains are also slowly gradually adding to the cash flows. So I think no doubt this has been an underperformer because this had already gotten a lot re-rated, and after which is quoting at around 40 train multiple, and in terms of forward multiples quoting at around 32, 33 times. So we find it quite reasonable here, would suggest to hold. It's a free cash flow generating asset, and more importantly, this company pays a reasonably good dividend yield as well. So definitely we are upbeat on this. But overall in the railway capex sector, because this is not a company which is directly a proxy of railway capex, but in terms of railway capex related to the EPC contracts, we find Ircon International still has some steam left. No doubt the stock has really run up well, but based on the order book and based on its execution ability, I think next 3 years are looking fantastic, and it can easily grow in terms of the revenue CAGR by amount of around 25%, and in terms of operational income, they can easily grow by anywhere between 20 to 25%. So gives us a lot of leeway because the current trail multiple is reasonable at 13 times. So definitely here also we are very upbeat in the railway sector.
Okay, so Ircon could be another option as well. Rajat, you come in on RCTC as well because, like Parthiv was mentioning, it initially saw that stupendous run, and now, of course, it's not participating like the rest of the railway stocks. But at these levels, do you think it still makes sense to hold on to this, and do you see a move higher anytime soon?
The biggest problem, Pavitra, is that whenever the big run that Parthiv referred to, that happened till about October 2021, there was a parabolic rise, and generally a parabolic rise is followed by a long period of consolidation. Initially it comes down, part of the rise is retraced, say about 50% or so, and then you go through a long period of consolidation. That consolidation is currently happening, but what I would like to tell the investor is that I would give two boundary conditions. One, if it falls below 600 and stays there for at least say 2 or 3 sessions, then it would be better to exit because further fall would be likely. And if it were to cross 650, where the 200-day exponential moving average is located, if it sustains above that, then definitely you get to understand that now it is in for a fresh upswing that may take it up to something like 700 to about 750. But the boundary condition is that 650 needs to be taken out at least a week. It should spend above the 200-day moving average. Then only you get to understand that fresh buying is happening and there could be a 15 to 20% further rise. But do not expect 900, 1000, 1200 kind of levels. There are no technical signals relating to that is visible on any kind of technical analysis.
Any of the other railway stocks which you think you like more right now, Rajat?
Homegrown Titagarh Wagon is pretty good. I would say that Titagarh Wagon, if you are a long-term investor, even at current prices also, you can get into that. And that is also, it has risen quite a bit. So on a decline, if it were to come to something like 275 to about 260 kind of levels, I would be more comfortable getting into that. But Titagarh Wagon is actually a very good long-term story that I can say that the base building, the way it is rising, everything is pretty good. This is a very healthy rise.
Okay, got that. So we have a new idea from Rajat and one from Parthiv as well. Rajat is saying Titagarh Wagons looks good, and Parthiv of course told us that Ircon could be a good one to look at as well. The next query comes in from Vishal Mohan, who writes in from Chandigarh. He holds just one share of Eicher Motors, but he's sort of started his investment into this space. He's purchased this at 33.05, so he's already made a little bit of money there. And he wants to know whether he should buy more of the shares of Eicher Motors. I guess the run up in the past month or so has him thinking about, whether this is a good opportunity. Parthiv, not just Eicher, a lot of these auto stocks have really rallied well, right? In 1 month, up around 10-11%. Do you think this up move that we're seeing is likely to sustain? And what is the kind of target that you would have on, say, an Eicher with a longer term perspective?
See, Bhavita, in the entire auto pack, initially what we saw was the passenger vehicle stocks did extremely well, and the two-wheeler stocks were languishing. Even likes of Eicher Motors, I recollect somewhere around in March, it was quoting at around levels of around 2800, 2850, and it just took one good quarterly result where we saw fantastic expansion in the gross margins, very good volume sales, and again the re-emergence of premium bikes. So that really helped the stock to get re-rated. That one good quarter, along with a very good commentary. They're talking about very good market share. They've not lost much market share. Rather, they're gaining more market share. The Hunter bikes are doing pretty well for them. And again, the pipeline for their products is looking looking very exciting. They're not really worried about much competition in that 350, 500 cc segment. And that is where I think the bulk of the operational EBITDA comes for Eicher Motors. No doubt the Eicher Volvo JV is also panning out well, and the CV segment is also looking decent. So it's on the back of very good numbers and good commentary, the stock got re-rated. I still feel Eicher Motors is relatively undervalued, and with such performance and with such growth, and they're also focusing a lot on exports. I still feel the stock has more legs to go up, so the investor can accumulate more stocks here.
Okay, so Eicher could go up further. You're sounding positive. Let's see if Rajat has the same view or not. Rajat, like I was mentioning, 12% in 1 month. How much is left? Because, if you feel like there's significant steam left here, it can go up more, then it would make sense to accumulate further.
Well, if it were to test, say, something like 3,900, then it would actually equal its 5-year high. Of course, that high has been posted very recently, late 2022. I think that was in the month of October 22. We saw a high of 38.89. Let it move beyond that first, then we can project further upside. But only thing that I would like to say is that I'm very happy to see all the two-wheeler stocks are doing well, because if the two-wheeler stocks are doing well, that means the rural India is somewhat getting better from an economic point of view, because it is rural India and its performance that that gets reflected in two-wheelers much more than passenger vehicles or even HCVs, because these people tend to spend. I have been there in various rural hinterlands, and the purchase of two-wheelers actually indicates that they are feeling good, that things are going to be better, and that's why they either repurchase or go for a second purchase kind of thing. So that from that perspective, this is a very good thing. And Eicher Motor is a great company, but it is not exactly meant for the common masses. But you can look at other two-wheeler stocks also: Bajaj Auto, TVS Motors, Hero MotoCorp. All of the stocks are actually looking good. But if he is actually thinking of buying Eicher Motors, I would say that wait for a decline, or if it crosses 3,900, then buy.
Okay, got it. That is the view on Eicher. Let's move on to our next query. We actually have a caller with us on the line. He's calling in from Bangalore. Mr. Balakrishnan, thanks for dialing in. I see that you have investments in Ipca Laboratories as well as Stake Solutions. You want to take us through your question?
Yes, ma'am. Yeah, good afternoon. Ma'am, I have invested in Stake Solutions and holding from July 22 at the price of 64 rupees, and total quantities 10,200 quantities I'm holding.
Okay.
And Ipca Laboratories I'm holding from 890 rupees, 900 quantities. So I just want to know, currently both the stocks are falling and it's lost now. I just want to know, is it good to hold for a long time to recover my entire capital? So I just need advice on this.
Okay, how long are you willing to hold? I know you said long time, but you're comfortable holding for how many years?
1 or 2 years.
Okay, got that. Let's ask Parthiv first. Parthiv, coming on both of these, like he mentioned as well, he's definitely seeing cuts on both of them. Ipca has fallen well below that 890 level right now. With a 1-year perspective, how much do you think you can recover on both of these names? Or does it make sense to, wait for a recovery here?
Sure. So, see, firstly on Ipca, one of the reasons for this massive fall, and which happened quite recently, is because of Ipca's acquisition of Unicam's business. And probably the street got spooked with the fact that, it was an acquisition that Ipca is doing to enhance its presence in the US markets. But Unicam itself was kind of struggling in that line of business. And probably the valuations at which the deal was done, I think was something that really spooked the street. And that is why probably we saw a massive 20-25% de-rating in Ipca's shares valuation. No doubt, I think IPCA, the company, has a tremendous track record. Almost 25% of the business comes from the API business, which is now looking up. Initially, there was some problem in terms of the raw material input costs, which are very high, which was kind of plaguing the margins here. But now all of a sudden, the API business is looking better. They have good mix of pipeline in the API segment. Even in terms of formulations, where almost 75% of the business comes from IPCA, is quite a steady business. So probably in a year's time, it's difficult to give a call whether he'll be able to recoup his cost. But over the next 2 to 3 years, we are upbeat in terms of IPCA's management's ability to turn around businesses. And that is when we'll probably see a better re-rating happening in the stock. So instead of 1 year, I would suggest giving a 2-3 year kind of a time horizon in IPCA. Talking about Take Solutions, I was just looking at the financials. Unfortunately, I think very bad set of return ratios. They are bleeding almost every quarter, and more importantly, there's no visibility. In fact, there's a decline, continuous decline in the business, and that is a key reason why such stocks tend to derate a lot of shareholder value. So no point holding on to such companies for long term. Instead, if you want to participate in the IT sector, thanks to the correction that we have seen recently due to a lot of macro headwinds, names like TCS in the frontline name looks good, or even in terms of a mid-cap space for a longer horizon, something like KPIT looks good. So it's better to go in such credible names rather than stick with the take level returns.
Yeah, okay, that is the fundamental view on both of these. You were talking about the fundamentals looking bad. I just pulled up the chart when we read out this query. Rajat, this is a stock that in 2018 was over 250. Look at the price now. Do you think there's, even from the buy price that we have, which is closer to around 70 rupees, there's been a sharp fall. Would you wait for a recovery here?
I would concur with Parthiv. If you have bought stock that is actually not performing and going for fresh lows and strong, the downtrend is still strong, then why should you remain there? Even if you are recovering, get 18 rupees, you should take that and get into good companies. On your channel, I have always mentioned that look for companies that actually generates high return on capital, at least say 20% or so, and then there should be good sales growth, and there should not be any accounting gimmicks and all that. That kind of companies make you good money, your capital increases, your capital grows, that is the thing. But if you stay put in this, there would be problem. So Take Solutions, strict no. Get into something better, as Parthiv was suggesting. Whatever be that, it could be KPIT, it could be Tata LXI, whatever you choose, that would be fine. And regarding IPCA, I would say it is the same thing, a parabolic rise and now getting corrected. It is still very weak. It can go further down. The downtrend is not yet over. But IPCA, there is a hope that it can bounce back. Only problem is that according to McKinsey, most acquisitions do not succeed, or they take very long time before the acquirer company make money in that. So that kind of an issue, when it comes, you see this kind of a problem with share price performance. So it would be a long period of time before he is able to recover his money.
All right, and he said that he's willing to wait for only about a year, so maybe this one as well is not looking so good. That is a complete fundamental and technical perspective on both of these stocks, IPCA as well as Take Solutions. But with that, it is time for a short break. You don't go anywhere. We're going to be back in just a bit to take a lot more queries. Welcome back. You're still tuned in to Your Stocks, and we still have Rajat and Parthiv with us to answer all of your stock-related queries. The next one comes in from Shyamal Chatterjee, who writes in from Dehradun. He holds 200 shares of Indigo, which he bought at 21.20. It's currently at 21.80. He's a short-term investor and wants to know what is the target that he should look at with a short-term perspective. Parthiv, the aviation sector, of course, has been, something that we've spoken about so much in the past few days and weeks. Of course, the rise that we're seeing on the stock is a lot to do with, what's going on with Go First. But how would you look at Indigo right now, and what is the short-term kind of target that someone could expect here? He is already making money.
See, Pavitra, it didn't take much time for incumbents like Indigo to raise prices ever since we saw all the planes of Go being down. So this is the pricing power such operationally well-run incumbents have when any of their competitors kind of lose the market. So this is one of the reasons why we saw Indigo share rally off late. And no doubt, I think there are a lot of other tailwinds. After a very long time, we are seeing the aviation turbine fuel becoming at a very comfortable level with a very high pricing power and high yields. We are seeing Indigo's return ratios come back to quite normal levels, and last quarter was pretty profitable for them. They don't have much issues in terms of operations, in terms of the P&W engine problems that other airlines like Go had faced. So their fleet will be replenished over the next 3 years. So they have a very good fleet-related pipeline as well. No doubt, I think one concern would be the valuations here. The stock has run up a lot, and the valuations are looking rich, but it is one of the market leaders. It has had a consistent record in terms of maintaining its market share, despite the fact that Tata's entry could be disruptive for Indigo going ahead. But our sense is that Indigo still has some legs to go up from here, thanks to a lot of triggers it has in place in the short to medium term.
Okay, so Indigo, at least for the short to medium term, looks quite positive. Rajat, you agree that at least from a short-term perspective, this is good to hold?
I'll give Samal Babu a target of say 2477, provided it crosses 2380. But since that is less than 10% and Indigo has been rising pretty sharply, he should be very vigilant, because his is a short-term trade, and use trailing stop losses, but do not wait till 2475 or 2480 kind of levels. Exit around 2450 if you get it. 2380 once crossed, there would be some kind of a euphoria, and that might take the stock up to 2450, 2477 kind of levels. The projection that I have made is an all-time high based on some Fibonacci retracement levels. So based on that, I'm giving the projection, but it's not curved in stone. Be vigilant. Book your profits whenever you see some kind of a chinks in the armor among the traders.
All right, so that is the call on Interglobe. Both of our guests at least saying that for now you can continue to hold this one. But with that, Rajat, Parthiv, we are going to take your leave. Thank you very much for joining us and helping us with all of these individual queries that we've got. We're going to wind down on the show with the news that the market is still at the low point of the day, 145 points down on the Nifty. The Nifty Bank has slipped further, 420 points gone there. It's definitely shaped out to be a weak session. Thanks for tuning in, and we have closing bell up next for the final hour of trade.